Hello Gains and Mindset family. Welcome back to the channel. It's your favorite girl trader, Amira. And this is the place where you want to be if you want to up your trading game. Today, we are diving into a topic that every trader needs to hear, even the big boys. Money management. How much should I risk per trade? Let's discuss that. But before we get started, you already know what time it is. Gold Trades was successful last trading week while scalping with the trading bot. What did I say about selling the news? We sold the news, and guess what? The market respected it. Gold went down just like we predicted. Make sure to watch the full 24 hours live stream on the Gains and Mindset HQ channel to see all the wins. And don't forget to hit that like button, subscribe to the channel, and turn on notifications, so you never miss out on any of our amazing content. How much should you be risking per trade? Now here's the thing. There is no one-size-fits-all answer to this question. It all depends on you, your personality, your financial situation, and your trading goals. However, there are some general guidelines that can help you find the right amount for you. So let's talk about those. First off, let's cover the basics. What is money management and why does it matter? Well, money management is exactly what it sounds like. It's how you manage your money when you're trading. This includes how much you invest, how much you can afford to lose, and how you react to winning and losing trades. Good money management is crucial for success in trading because it helps you stay disciplined, avoid making emotional decisions, and keep your trading sustainable in the long run. Basically, it's the difference between being a successful trader and blowing your account. Now, let's talk about the different methods of money management. There are several popular methods out there, but today we're going to focus on 3. Fixed fraction, percentage of total portfolio, and Kelly criterion. The fixed fraction method is simple and straightforward. You decide on a fixed amount to trade based on your bankroll. For example, you could decide to trade 1% of your bankroll each time. This method is great for beginners because it's easy to understand and implement. Next up is the percentage of total portfolio method. With this method, you would allocate a certain percentage of your total portfolio to each trade. For example, you could decide to risk 2% of your total portfolio on each trade. This method allows you to scale your trading based on your current portfolio size. So, as your portfolio grows, so does your trading capital. Last but not least, the Kelly criterion. This method is a bit more complex than the other two, but it's based on mathematical calculations that can help you maximize your profits over time. The Kelly criterion involves calculating the optimal fraction of your bankroll to risk based on the odds of winning and the potential payout of each trade. While this method has its benefits, it may not be suitable for all traders because it requires a lot of calculations and research. So let's talk about how much you should risk per trade, according to Invest. But why is this the case? Let's take a look at this blog post from investopedia.com. To put it simply, by risking 1 to 2% of your account on any given trade, you have enough cushion to weather any sort of downturns in the market. In other words, if the market goes against you for a few trades, you won't have to worry about your account balance dropping too much. Plus, if you follow this rule and have good money management practices, you can expect to have around 30 to 50 profitable days out of 100. That means that you'll have enough profits to cover your losses and still come out ahead. Let's see what ForexExplorer.com says. They say you should risk 1 to 2% per trade. Why? Because they say if you risk too much, you might get wiped out. No bueno. If you risk too little, you won't make enough profit. Also, they say that most traders blow their accounts because they don't manage their money well. Now, what are some signs that you have good money management? Well, first off, you never risk more than 2% of your account on a single trade. That's important. You also have a written trading plan that includes your strategy, money management rules, and position sizing. You keep detailed records of your trades so you can track your progress and learn from your mistakes. You use a trading journal to track your trades and analyze your performance. You only trade with money you can afford to lose, and you do let emotions dictate your trading decisions. If you can check off all these points, then you've got good money management skills. Now, how do you actually calculate how much to risk per trade? Well, it's simple. Just multiply your account size by your desired risk percentage. For example, if you have a $1,000 account and you want to risk 2% of it, you would multiply 1,000 by 0.02, which equals $20. So you would risk $20 per trade. Just make sure to stay within your limits. Next up, let's talk about some tips for implementing money management techniques. First off, always remember to have realistic expectations. Don't expect to become a millionaire overnight because it doesn't happen often, especially not in Forex. Take it slow, be patient, and focus on making small, consistent gains over time. Next up, Diversify your portfolio. Don't put all your eggs in one basket. Instead, spread your investments across different assets to reduce your risk and increase your chances of making profits. Another tip is to use a trading journal. Keep track of your trades, analyze your performance, and learn from your mistakes. This is an essential tool for any trader and can help you improve your overall trading game. Remember, practice makes perfect. Start with a small account and gradually increase the size as you gain experience and confidence. And finally, be prepared to adapt. The market is constantly changing, so you need to be able to adapt to new conditions and adjust your money management techniques accordingly. So there you have it. A breakdown of money management and how much you should risk per trade. Remember to take these guidelines and apply them to your own trading style and financial situation. Don't be afraid to experiment and find what works best for you. And always remember to be patient and don't expect to get rich quick. Before we wrap up, let me share something personal with you. I know that sometimes it can be challenging to stick to these money management rules, especially when you're feeling impatient or want to chase those big profits. Trust me, I've been in your shoes and I understand those feelings. However, I want you to know that it is possible to achieve success in trading without having to resort to risky behavior. Sure, you might not become a millionaire overnight, but that's okay. I believe that the true satisfaction and fulfillment comes from achieving long-term success through hard work and dedication. By following these money management guidelines, you'll be setting yourself up for a much more sustainable and fulfilling trading journey. So take your time, be patient, and trust in the process. And hey, if you need any support or guidance along the way, just reach out to me or any other experienced traders you look up to. Remember, consistency is key, and with time and effort, you'll be able to achieve your financial goals. Oh, and don't forget, it's your favorite girl trader, Amira, and I'm here to tell you that you can do this. Don't let anyone tell you otherwise. Wait, hold up, rewind. Did somebody say it's your favorite girl trader? Amira? That's right, baby! It's me, and I'm here to tell you that every service or signal is completely free and will always be free. There will never be a payment now or in the future. Did I say free? I meant free. Repeat after me. Everything is completely free, and if anybody that's all for today. My little pips. I hope you enjoyed this video and learned something new. Remember to like, subscribe, and turn on notifications so you never miss out on any of our amazing content. And don't forget to follow us on social media for even more trading tips and tricks. Thanks for watching, and I'll see you in the next video. Bye!